welcome to Markets Today with me, Gaurav Kashyap. A quick look at the markets today, and we'll notice that some of the trends from yesterday are continuing into trading today. Dollar weakness continued into trading today after hitting 13-month lows at 93.82 yesterday. The US dollar has been under immense pressure since the start of July, in which the index has lost more than 1.7%. The greenback has been hit particularly hard by political developments in Washington, the recent gridlock highlighted by the two failed attempts at repealing Obamacare, coupled with ongoing investigations between the Trump administration and Russia, have seen the US dollar remain very vulnerable and sensitive to downside moves. And this theme of political uncertainty equating to economic uncertainty will continue to trend going forward. The US data docket, which has slowed considerably through Q2 and Q3, has also weighed down dollar prospects, which makes tomorrow's FOMC release all the more important. While there's no chance of a rate hike at the announcement tomorrow, markets will instead turn their focus to the accompanying FOMC statement, in which markets will get an insight to the Fed's view on the economy, future growth, and more importantly, clues on the Fed's views on reducing their balance sheet. The Fed could adopt a wait-and-watch approach tomorrow. They've delivered 2 out of the 3 rate hikes promised in 2017, and they're yet to see a really consistent string of US numbers to turn up the hawkish comments. Plus, if you combine the cloudy US political scenario, this in essence buys the Fed more time for them to wait and see how things pan out in Washington. So overall, expect markets to trade sideways in the lead up to tomorrow's FOMC rate decision and the announcement, which is due out at 1600 GMT time. The European economic calendar today boasts nothing of note. The US economic calendar also remains quite late on data releases. Considering this, expect markets to trade in a rather subdued, range-bound fashion. Expect these tight ranges to continue through tomorrow's US opening. Having said this, we consider the euro to trade between 1.6020 to 1.16080. That's a support at 1.16020. With an upward resistance at 1.16080, and we expect the GBP USD to range between 1.30 and 1.3060 today. Expect the volatility to pick up in the GBP crosses tomorrow with the release of the UK second quarter GDP print due out at 8:30 a.m. GMT tomorrow. Markets are expecting a print of 1.7% overall growth in Q2. This is well below the previous reading of 2%. Overall, the data from the UK has been showing signs of slowing growth, and a miss on this GDP number would create a good selling opportunity in the British pound tomorrow. And finally, if you look at gold, gold remains in the middle of the trading range. There's strong support in the channel between 1241 to 1243, at which point good long positions can be built. Upsides seem to be capped at yesterday's high price of 1258, and we expect this range to continue through the US session tomorrow. Considering the FOMC release tomorrow, it would prove very prudent to start building possessions from Thursday onwards. Guys, if you found this video informative, please give it a like, give it a share. If you had any questions about what we discussed today, please leave them in the comments below, or you can tweet me directly at EGM Futures on Twitter. I'd be more than happy to address those questions or any comments that you have. And if you haven't already, definitely check out the all-new newsroom at www.equity.com. It's packed with interesting market-related content and analysis, which will ultimately, hopefully, help you trade smarter and trade better. Have a great day of trading, guys.